Earlier today, Tesla released their vehicle production and delivery numbers for 2022. Tesla stock has fallen almost 50% in the past 6 months, with the majority of that drop being over the past month. So it goes without saying that many investors were looking towards these delivery numbers to get a gauge of the stock going forward. And depending on whether you're bullish or bearish, you might take these numbers in a different way. In this video, I just want to share some of my thoughts around these numbers, as Tesla is my largest position. Let's jump right into it. So I'm just going off of the press release here. The business announced 439,000 vehicles produced for Q4 of 2022 and 405,000 vehicles delivered. In 2022, vehicle deliveries grew 40% year over year to 1.31 million, while production grew 47% to 1.37 million. In their note, the company also made note of significant COVID and supply chain related challenges throughout the year that affect these numbers. Now, they also highlighted in their note that they continue to transition towards a more even regional mix of vehicle builds, which again led to a further increase in cars in transit at the end of the quarter. For Q3, there was a discrepancy between production and deliveries, which the company said was a result of them delivering cars in the final days, and they don't really count a car as delivered until it's actually delivered. They don't count anything in transit as delivered. So this resulted in some discrepancies between deliveries and productions in Q3, and it seems that the company is again pointing to this for discrepancies in Q4 delivery numbers. Tesla's head of investor relations also chimed in on the delivery numbers, saying that a smoother delivery pattern will require more vehicles in transit, which is why production is more than deliveries. Now, for a slightly more contrarian take to that, Gary Black on Twitter brought up the point that many bears have been relying on, basically asking the question whether this discrepancy between production and deliveries is in fact due to vehicles in transit, i.e. this regional mix of builds, or whether there are in fact demand issues starting to creep in for Tesla. And I think the answer to this and towards overall demand should come from the company's leadership on January 25th, which is when the company in their note announced their Q4 earnings report. And one interesting thing that I didn't see in this report was anything with regards to semi-deliveries or production. I know that Pepsi was taking their order in December, so there was actually semis being delivered. It's just that they weren't mentioned in this note at all. The head of Tesla Investor Relations, Martin Vieja, also announced that Tesla's Investor Day would be hosted on March 1st, with more details to follow. I think that with the Cybertruck having fully entered production, Elon and the rest of the team have, over the past several months, been asked repeatedly around a new model, to which he has responded that this is not the right forum to announce a new product launch, generally over Twitter Spaces or on an earnings call. I wouldn't be surprised personally if there is an unveiling at the Tesla Investor Day event, especially because in their note, they highlighted that investors will be able to see our advanced production line, as well as discussing long-term expansion plans, Generation 3 platform, capital allocation, and other subjects with our leadership team. So it sounds like a couple of the main topics discussed will be the new model, potentially, new factory launches. I know Mexico has been floated around as a strong contender over the past several weeks, and we're expecting Tesla to announce a new factory anytime now. Potentially, we'll also get more information around stock buybacks. I know Elon said the board was open to doing stock buybacks. They just wanted to basically time it correctly so that they're not left in a bad situation financially in a recessionary macroeconomic time. And also reading this note, it sounded like Master Plan Part 3, which Elon has been alluding to more and more over the past several months. So maybe something to do with scaling or with raw material sourcing for Tesla. Now, the positive news around this is that it marks another record in terms of Tesla's annual deliveries. Here's a list broken out by year of deliveries and the respective growth rate. And if you're looking at this and comparing it to 2021, when they had 87% year-over-year growth, and saying, well, 40% compared to 87 is not that much, look at all the rest of the years holistically, and you'll realize that 40%, in my opinion, I think is very much what we've come to expect from Tesla, especially with a year like 2022, which was tough with regards to supply chains. And just to cap off those deliveries, with these latest numbers coming in this quarter, Tesla has now delivered a total of 3.65 million electric vehicles in its entirety as a company. And to putting some of those numbers into context, Matthias on Twitter made a chart over the last 3 years of Tesla deliveries, pointing to a 62% compound annual growth rate, which is pretty terrific to see for a company of that size. Now, of course, the flip side of these deliveries was that they fell short of analyst expectations. Analysts were expecting around 420,000 deliveries, and Tesla undershot that by about 15,000. And overarchingly, many of the bears are going to be looking towards weakening demand in 2023. And Elon himself said that the market was going to be tough in 2023, with Tesla's margins potentially falling as the economy tightens and discretionary spending for big ticket items falls. So I think to wrap up this video, the big question to ask yourself is really what Gary Black pointed to on Twitter in the short term around the discrepancy between production and deliveries, whether that is simply a logistical issue or whether it points to a longer term issue, which is waning demand for Tesla vehicles in this recessionary macroeconomy. And depending on who you ask, they'll have different answers for that question. As for the stock, I think most people tomorrow are expecting it to open in the red, given that this was a miss on analyst expectations. However, there could also be a contrarian take to that, to saying that Tesla could move higher because all of this negative sentiment over the past month has discounted the stock so much so that the market was actually expecting a bigger miss than what they actually reported. Personally, I'm not really fussed either way, whether it goes down tomorrow or up tomorrow. I'll be buying Tesla this week regardless, I think. I think this is a terrific price if you're looking at it in a long-term perspective for several years. So very likely throughout 2023, I will be adding more heavily to my Tesla position. Even though it's a really big part of my portfolio, I think Tesla and SoFi are two stocks that I really want to be adding to because they've been beaten up, in my opinion, disproportionately to what they should be. I think the company over the next 5 to 10 years has a very bright future ahead of them. I think 2023 in particular is going to be a tough year for the company, and I think that there could be much more pain ahead in the short term. But regardless, I'm still buying in the long term. If you enjoyed this video and you want me to make more Tesla content, just let me know in the comments below. Thank you so much for watching. This has been the Fundamentals Investing Podcast.